I'm the best stock analyst in the world. Do you know how I got to be where I am? I sat over my lunch break at my accounting job. And you know what I did? I made a stock analyzer tool that I totally didn't steal from everything money. I made it in 20 minutes. And now I can analyze stocks better than the foo-foo, who's been investing for 14 years apparently. Woo! Welcome back to Strongman Personal Finance, everybody. My name is Christopher Belling. I'm a certified CPA accountant. I'm a long-term boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And I'm going to do some analysis of Google McDougal. Google my Google. Google my Google. So, as I've done previously, God, this freaking hat kills me. I don't know why I'm wearing this. As I've done previously, I made this little stock analyzer tool. It's basically a copy of Everything Money's, but it's very useful to screen out overvalued stocks. And I've actually done no analysis on Google. I have no idea about anything with the company. I haven't read the 10K. I haven't read any news articles. I don't track the company. I don't read analyst estimates. I'm just going to look at some numbers, and I'm going to give you my honest opinion. I've literally done no preparation besides pulling up some data. So we're going to see what Strongman would do to see if he actually would consider looking into a stock more. Now, remember, if you see a stock that's a buy based on this tool, it doesn't necessarily mean it's a buy. You do the analysis, and then you say, okay, does this make sense? Does the market cap 5 years from now make sense? Does the revenue 5 years from now make sense? Does the PE from 5 years now make sense? Does everything make sense? Because you can put whatever numbers you want into a model, and you can come out with anything that will confirm your biases. And there's tons of stocks out there. Like you go on Everything Money's tool, and they got stocks that are like they meet all 8 criteria. They're all green checks. But if you actually look at the stock, you do a little bit more digging, you might realize that some of those stocks are cheap for a reason. Okay, so let's go and look at Google McDougal. Let me share my screen. Okay, so first we're gonna look at the stoic price. So right now, Google's down 3.59% today and 2.9% in the aftermarket. Why did this happen? I'm out of water. Oh, there it is. Okay. Why did this happen? Let's see. Google's parent company, Alphabet, reported first quarter sales that were roughly in line with estimates. Okay. Because if those sales weren't in line with estimates, if they were a lot lower, that would have been trouble. With the big tech showing resilience in its key search advertising and cloud business. However, earnings came in lower than expected as costs mounted and growth in the tech behemoth's YouTube videos business slowed down. Yeah, that's right. My freaking ad revenue is going down. Pissing me off. All right, so let's go ahead and look at some numbers of Google McDougal. So the first thing that I noticed when I looked at this, if you look at this chart, this is the annual revenue of Google from 2002 to 2021. You could see that Google's had a steady climb in revenue, but from 2020 to 2021, I see a massive increase in Google's revenue. What percentage increase is that? Let's do some insanely hard math and let's see. God, what the hell happened to my calculator? 256.74 divided by 181.69. So Google's revenue in 1 year went up 41%. For a large cap growth company like this, that's freaking crazy, okay? Now, my theory is we printed a lot of money. Everybody was flush with cash. So a lot of businesses, after we started coming out of the pandemic, they probably wanted to flood the market with advertisements because there's all this pent-up demand. All these businesses know these people have stimulus checks and child tax credits, unemployment, and they freaking threw money hand over fist at ads. But looking at this kind of scares me because you see a deviation from the norm. You see a massive deviation because Google's revenue grew 41% from 2020 to 2021, and then you got 181.69 divided by 160.74, and then it grew by 13% the year prior. And we got 160.74 divided by 136.36, 17%. So 2021, I think, is a fluke. And honestly, I would be scared that Google's revenue might actually decline a little bit in the next year or two. I could be totally wrong, but if you look at the trend, 17, 18% revenue growth, and then all of a sudden, kaboom, 41%. That seems like there's some kind of weird crap going on, in my opinion. Okay, especially if there's a recession. I don't know. I think if ad revenue goes down, or if revenue stays flat or decreases even for a quarter, there's going to be some trouble with Google McDougal. So honestly, just looking at this right off the bat, I wouldn't be buying this stock, besides in VT, of course. Yeah, 23%, 17, 16%. Definitely not. I would not put 40% revenue growth in my model. Okay. So let's go ahead and figure out what Google's trailing 12 months of revenue is. So their revenue was 56.02. So we got 56.02 plus literally all I'm doing is I'm just looking at, publicly available sources, and I'm adding up the last 12 months of revenue. So 75.32. And this is assuming they keep growing, but honestly, I would be a little concerned. But, maybe I'm crazy. Revenue just always goes up forever and ever, even after a crazy pandemic, after we printed money. Let's see, 61.88. Okay. So it looks like the trailing 12-month revenue of Google is $258.3 billion. That seems about right. Let's see. You always want to double check in case your math's for jacked up. Okay. Yeah, seems about right. Yeah, this report was updated, I guess, at the end of 2021. So yeah, 280 something. Okay. Or 258. Wait, is this updated? I think it wasn't entire. I think it's missing the earnings that just came out, but whatever. Google's revenue. Now we need to look at the shares outstanding. So let's go over here. Shares outstanding. So you can pay for everything money. Not that I hate them, or you can just do this. I'm cheap. I got freaking kids, so it's expensive. Alphabet shares outstanding for the quarter ended December were okay. I don't know what their shares outstanding are right now. I could Google it, but I don't know if that would be accurate. So we'll go with 723 million shares. 723. 0.00000. Discount rate, always want 15%. Now, revenue growth assumption. What do I think Google McDougal's revenue growth is going to be over the next 5 years? So let's see. So this is really freaking hard, ladies and gentlemen. Honestly, I think there's been such a jump in Google's revenue. I think it kind of like this last quarter kind of just blew it out of the water. So what I think, let me do some thinking here. So if the trend stayed consistent and we ended 2020 with 1.81 billion in revenue and we grew at 17%, I'm going to say their revenue is going to grow 6% over the next 5 years. Now, you may think I'm freaking crazy, but if you really think about it, look at this massive spike as we're about to enter a recession. Now, this model's not 100% accurate. It's not, because you really have to look at each year over year, and figure out, okay, what do I think the revenue is going to be every freaking year? This model, super simplistic, instant screener. So we're going to go with 6% over the next 5 years, compounded every year. And we're going to have to look at the profit margin. So what is Google's profit margin? Let's see. Okay, here's another thing. Look at the freaking profit margin. So you can see during the pandemic, they had a massive explosion in profits. That's probably what shot the stock price up. But is that sustainable? If we're going into a recession, are companies going to increase ad revenue or decrease ad revenue? I don't know. Now, with my projections, I would use a more conservative estimate. I wouldn't use this number up here. I would not use 29%. I would probably use somewhere in the low 20s. We'll go with 22 to be nice, okay? 22% profit margin. And then PE at disposition, 15. Market average and share dilution. Are they buying back shares? Let's see. Dun, 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 dun. And this is just my initial analysis. Obviously, if you really want to value Google, you got to look at it and say, okay, what is the revenue going to be next year, the year after, and the year after? And honestly, if you look at it, So the last 12 months was 258 billion of revenue. This model is saying in a year they'll have 273 billion. I mean, that's not outside the realm of possibility. And this model is also saying that the market cap of Google in 5 years is going to be $1.14 trillion. Is that crazy high or crazy low? No, that actually kind of makes sense to me. I don't know. Maybe I'm crazy, bro. Maybe I'm crazy. Let's see if they're buying back shares. So, were the shares outstanding? I thought I just had it. There it is. Okay. So it looks like they're buying back shares. We'll say 1.25. We'll say one. We'll say 1.5. Okay. So, according to this modello, and this is assuming a very conservative revenue growth assumption of 6%, which I think is possible if we have a recession, or even could be lower. I would buy Google at $1,169 personally to get a 15% return. Now, if you want the market's historical average, $1,400. If you think revenue is going to grow at 10% per year and you want a 10% return, it's $1,600. Google is nowhere near where I would consider buying it. Not even on the freaking slightest. What is it trading at now? Let's see. Where's Robinhood Stock? 2,300. I mean, what would it take for me to buy it at this valuation? 20% revenue? Okay, yeah, I see what Wall Street's doing here. Okay. They're freaking they think revenue is going to keep growing at 20% every year, bro. And maybe they think profit margins will be higher. Oh, look at that. Now it's a buy, ladies and gentlemen. But of course, if you use this model, common sense factor, could Google be a $2.7 billion market cap in 5 years? Maybe. I mean, I don't see it as being implausible, but that's pretty rich to me. What is the market cap now? Yeah, here's my. Oh, yeah, I thought you were going to be able to see my portfolio. Okay, it's $1.5 trillion. So in 5 years, 2.7. So almost a double in 5 years. Maybe. I mean, that's plausible, but in my opinion, is it likely after seeing this freaking massive run up in revenue? This is what scares the crap out of me. Massive run up in revenue and massive run up in margins. Okay. But like I said, you can't freaking just use this and say, oh, this is a terrible buy or not, because at least it's highly profitable, unlike Tattoo Trucker's taint sack. And it's got room to grow. I mean, I don't know. I wouldn't buy it. Personally, I would buy it. I mean, 6%. 7%. We'll use that. Profit margin 22. I'd buy it in the low thousands. Not even joking. Not even freaking joking. In the slightest. Okay. But that's just my opinion. So let me know your thoughts. Are you mad about my Google McDougal? Let's see. Do a DCF on Genius Brand. Oh, God. Let's see. Bought more Google today. Good luck. Strongman, what is the word you always say at the end? Choose or juice? It's choose. It means goodbye in German. It's like in a certain part of Germany. Choose. Projected 4.3, 17, 12%. Yeah, I mean, if you look at that, and that's just projected revenue. What if we hit a recession? It could be lower. And if you average that out, maybe it's 6%, maybe it's 8%, maybe it's 10%. I don't know. I can't do the math off the top of my head, but it ain't going to grow at 20, 30%. I'm telling you that, ladies and gentlemen. Google announced buybacks today. Okay. Then if you use your model, maybe you can increase buybacks by, a couple percentage points. As Jeremy would say, I'm sure Jeremy's buying the dip right now. Google is doing a $70 billion buyback. Okay. I mean, even then, even if they started buying back shares, I mean, I just don't see, with that massive spike in revenue, I don't see revenue growing extremely quickly over the next couple of years. I think even those projections might be too high when you think about a recession. I mean, I don't know. Maybe I'm talking out my butt. I don't know. But I would not buy Google right now, in my humble opinion. I'll be buying Google until 2025. Go ahead, bro. I'd rather buy Baba, which everybody hates on, but you want to talk about a cheap stock? That's a cheap stock. I mean, for reasons, but whatever. All right, that's it. I don't think Google's a buy, but maybe I'm wrong. Maybe it'll 10x, but it's still a better deal than Tesla. If your Google analysis is as good as your Tesla was, I wouldn't trust it. Just buy Google, bro. Just buy Tesla, bro. My analysis actually confirmed what you Tesla shills were saying. It 100% did. It showed that if you grow Tesla's revenues by 50%, which is massive, massive growth. If you grow it by 50% and it has more revenue than Apple, okay, maybe it's a buy. But the whole point of the video was it doesn't make any freaking sense that this luxury car company is going to grow 50% every freaking year, have more revenues than Apple, have more revenues than Toyota, Volkswagen. Boom, 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 boom. Doesn't make sense, ladies and gentlemen. Whatever, just buy Tesla. Just buy Tesla. Tattooed Chef. When will you analyze Facebook? But when do their earnings come out? I don't know. I don't even know when their earnings are coming out. I know it's either today or soon or something like that, and then I'll look at it after that. But honestly, I still think Facebook's cheap. I mean, I would do your own research, but I think even if you have low revenue growth assumptions going into the future, I think it's still cheap compared to other companies like Google. Your mom has massive growth. Oh, good one. I bought Nano Dimensions, 3D printed tampons of the future. Earnings are tomorrow? Yeah. Yeah, I mean, honestly, I'll wait till after earnings. I never buy right before earnings, but we'll see. We will see. Used to cost Tesla $37K to make a base Model 3. Now it costs the $32K. Okay, cool. Yeah, Tesla's that's the future, bro. Everybody's gonna buy a Tesla. There's no other brands. Everybody just likes Tesla. That's it. Every single person in the world is gonna buy a Tesla. Duh. There's not like people that like different brands and stuff like that. No, not at all. Palantir wouldn't work in this model. It's unprofitable. Thoughts on chip designers like NVIDIA? I would not touch chips, man. Chips have been all the freaking rage.